Martin here from seekedge, the channel for learning about trading and investing. Welcome to another brand new episode of Markets Tomorrow. So the daily technical analysis that's simplified for you, helps you analyze what happened in the market today and then also plan your trade for the next day. And this is analysis for the August 12, 2021, Thursday and expiry day. So if you have not subscribed to the channel, please hit on the subscribe button and share it to maximum. That's the only way you can keep us motivated to keep doing this videos for that, every single day. So as usual, every day what we do, we analyze the market based on the candlestick patterns, price action, and all of these what you see on the left side on the charts. And then on the right side we have additional analysis based on the institutional participation, volatility, open interest, sectorial watch, and then you wind up with global markets and you wrap up with some actionable list. So without wasting much time, let's get into the Nifty charts. Nifty 50 chart, what you see here is a hammer pattern, and the wick on the down, the shadow of this candle down shows that its bulls are still there, right? The pressure from the bulls, the buying is what you see there. Overall, if you see, it's consolidation that is happening 1, 2, 3, 4, 5 days of consolidation after the breakout. Bank Nifty charts, what you see here is a bearish open to high pattern. This is a wide range big candle, but at the end of the day, I think the bullish pressure is seen because the market the wick of this candle is slightly long, so there were bulls that were in action, but overall if you see, it's consolidation that's happening 4-5 days after the breakout, right? So let's get into the lower time frame and see what happened in the intraday, right? So what happened was a V shape, right? That's what is mentioned on the title of this today's talk also, right? Market gapped up and then gave false impression of moving up, and then it dipped, right? How much point was that, right? Let's see how much will fall. The fall is around 1%, around 180 points. It dipped after it mildly gapped up, right? And from there it recovered, so it's almost a V, we can say, right? So finally you ended up at the same place where where you were yesterday. That's what happened in Nifty. And in Bank Nifty, if you see, the same, right? The same story. Today what happened is it was a gap down and recovery, but the recovery is only halfway, right? So it was not a full recovery V shape, right? So it fall down 650 points and then it tried to recover around 400 points of that, right? So that's what happened in Bank Nifty. And let's get into see further details, right? So Bank Nifty was bearish, so we can see that there was a triangular consolidation that we found yesterday, which it attempted to break out yesterday and in the Bank Nifty, but that seems to be negated, but the consolidation is still in process. Nifty, the triangle pattern is still it also seems to be negated, but it's more like a flat pattern um, that that may be forming today. If you see that, so there is some kind of consolidation, flag and pole, kind of either a triangle or so. So there was some kind of flag pattern continues to be there in the Nifty. So you can see that it is consolidation that's happening, right, in Nifty and both indices. So what actually happened, if we look at the support and the resistance levels, is that we can see that the Bank Nifty attempted to hit the resistance zone of 36,536 and went till the 36 300 that level, and then no, could not further move up, and then went back the support zone of 35 600, and then could not hold that support zone. It dipped little more further up to 35 500 levels, right, and then it moved up, right. So it was actually moving between a resistance and a support zone, and in fact it slightly breached the previous support zone also, and then it bounced back from that. Nifty, what happens is it's already in the all-time high, uncharted territory. Yesterday also it made an all-time high. So 15, 16 350 is the resistance zone that we can see clearly, right? Which is also the fib 50% projection, right? And further upwards, you can see that it could go and touch 15,500 kind of levels, which is in 61% projection level. So downside, we're not gone downside, so the support still remains in 16,000 rounding number, and below that 15,950 to 15,850 kind of range, and all other support zones below it 15,600, 500, and all that remains the same. Nothing has happened. So it's Nifty is in the uncharted territory, right, near to the all-time high. And Nifty is just cannot go beyond the resistance, which is at the 36,000 to 36,500 kind of levels. That is support and resistance. And if you see the Bank Nifty's momentum today, it has dipped slightly in the sideways. The momentum is slightly lost, but not too much, since it is 57 kind of momentum. On the other side, it may bounce back again. Nifty, yes, the momentum is intact. You can see it's still in the bullish zones. Trend is for the Nifty is further dipping. The strength is not fallen, it's still rising. In the case of Bank Nifty, it is the same. It continues to be the trend. It continues to be the bullish zones, right? But it is falling. So the momentum is gone for the Bank Nifty. That's all, right? The trend continues to be in the bull zones for Bank Nifty and Nifty both, right? So that's about the chart study, and let's now move into and see. Oh. Let's see the open interest, and the data is not coming for today, so let's go to the open interest for the Nifty for tomorrow's expiry. What does it show? It shows that it is 16,300 is ahead, right? So it is near to the all-time high. So this is the highest call writing is there. The support region is 16,200, right? Which is the highest put rating is there. So it's tight scenario that you see in the charts. Put call rate is 0.89, is not bullish enough, you can say, right, for the next expiry. Bank Nifty, the highest resistance is 36,000. We already know that is where it got hit and then come heavy resistance, right? So whether it will take it or not, we'll see. So put writing is at 35,500. Whether it will slip to 35, it's already did one slip to 35,500 levels today, and then from there it bounced back. So the action will be at 35,500 and 30, between 35,500 and 36,000 tomorrow, most likely. Right? This is not bullish at all. It's less. It's 0.65. It's not bullish. For Bank Nifty's put call ratio. 0.83 is what Nifty. There is also that not that bullish, right? So that is the open interest data that we're talking about. So India VIX, if you see today, if you see the 5 minutes and the line chart, you know what happens. So today was the VIX shot up slightly, right, from yesterday's low of 12.6 to 12.7. That's what happened today. All right. Oh no, sorry. So that's a 5 minute charts. It's not that, right? So what actually happened is it was flat, right? It's more or less a fan. or it's the same 12.7, just flat day. Sorry about what I said earlier. So now 5 minutes, if you see what intraday happened was the wick shot up and the market dropped and the wicks fall down with the market fall down. This is the action of the wicks, right? So volatility continues to be 12 point kind of levels, very low levels. And the institutional participation, if you see, you can see that today the Fyers bought slightly, right, which is good, around 230 crores. Lee has also bought around 200 crores, right? That's interesting, right? So, I don't know, the institutions are not selling is something good. And let's get into the charts again and what are the additional details that we can see? Sectoral watch. How did the sectors perform today? Right, let's see the heat map and try to understand. So today the metals, energy performed. The rest of them all didn't perform. Metals, Stellar Steel, just would see Hindalco and all this metal outperformed. Energy stocks, Lens, Power Grid, NTPC, IOC, all crude oil has come down. Right, so metals and energy performed today. Let's see the charts of these sectors and see if we can understand something. So Nifty ID slightly bearish, small body candle, but overall it is bullish momentum and trend. All the stocks didn't perform today, just that. Metal shot up today, wide range green candle, you can see. The momentum also is caught up. The trend has continued to be in the bearish zone, actually speaking. Right? So we can see that there was a breakout that happened, and after that, there was a dip that had taken. So this is on the weekly charts that happened, right? So there was a bearish divergence that was there. Probably that may be the reason why it dipped. Right? Bullish had earlier, previous weeks it was completed and then shot up. So the action that you're seeing now is probably the bearish divergence that most likely is completed, right? And then it is trying to catch up and move further upwards. Right? So it's got to be cautious here, just like because weekly, if you see, if I'm not mistaken, the bearish divergence target is not met, it just dipped, that's all. So there is a possibility that it can further go down. So overall, you can say this metals have gone back into the bullish from the sideways again. It was pretty, but trend is still bearish, and there is a bearish divergence, so you have to be careful, cautiously bullish. This is clearly slipping down again. Auto, it's sideways. Pharma is sideways. Now the bullish reverse divergence is not working, and FMCG also sideways. Yeah. Even the reality has gone sideways today, if you see that. But there is a bullish pressure from the downside, so it has formed a hammer pattern with a very wide back. This is probably indicating that it's getting ready for further up move, but the momentum has dipped. Just to climb up, we have to wait for to climb back, right? So this is kind of a CIP bounce most likely. So it had a resistance of a long a long period resistance forming a rounding pattern and broke out, but again came back at the previous place where it faced the resistance. Now if it is going up, there is not a change in polarity. So you have to keep a watch and wait for the confirmation of closing above this candles, above this like green candle above this, before we can get confirmation, right? So that's about the different sectors. Let's now see what is happening in the dollar, right? So if we go to the where's dollar? Yes, so dollar is strengthening like anything. You can see that it is kind of going up and up. So this small body candle can be seen here, but dollar has been steadily going up, right? You can see that 93.45. This level for the dollar index is a major resistance zone. So if that is gone from above that, it's going to rupee very weak. So here also you can see that it has come, dollar is weak. The rupee has appreciated today. Dollar has gone down, right? But it's in the same. It had caught up with two wide green candles, and then this is a major support zone that it is, right? So it's, as long as it's holding there, it is supposed to remain between 75 and 74 levels, and there is a channel top where the 75 is coming. So so the US yield is rising up, US dollar is strengthening, right? And USD rupee is weakening, as well as saying. And the oil is dipping, dipped to 69 kind of levels, and this is a major resistance zone, 69.5 to 70, that level is a major previous resistance zone. That's where it's hovering. At least it has come down from the 75 kind of levels. It's good for the economy. Gold had made a big dip after the dollar strengthened, but it recovered and it's showing a green candle, indicating that it's bouncing for the median of the channel, right? So gold continues to be an inflation hedge, right? Although it did a minor big fall from the channel top, right? So, but it is back in green is good news for those invested in gold, right? So that's about the commodities, global commodities, and overall, if you see, it's green. The Nasdaq, the Dow Jones, and the S&P 500 all are green, right? Mildly green, and the Europe, Asian, all markets are green. So global cues looks very green as if nobody will have to check next day also, right? And a few actionables. Uh, yeah, you can check some of this in my Twitter handle, some of the stock level information is out there. You can check that. But just to wrap up, you can see that it's consolidation that is happening in the market, both the indices, right? Price action is clearly showing that, right? Low volatility and high V-shaped moves, low volatility levels, but choppiness is very high, right? That's the kind of price action. Spikes are very much. V-shapes are there continuously for the last 3 days. So, we'll be cautiously playing in the intraday. But 16,000 should be a very good support even if it falls, and it may take some more consolidation to move up further to create another all-time high. So for this, tomorrow is an expiry day. So most likely it will be 16,300 levels where it may be closing, or 16,200, which acted as a kind of support which is broken today. So positionally, right, we will have to continue doing the long until it breaks the 16,000 and 15,500 kind of levels. But intraday, it does be price action purely, and keeping watch of the VIX and open interest at the same time, right? But, with tight stop losses, because V-shaped movements are very frequent nowadays. So that's a wrap up. So hope this helps you to plan your trading day and make a good trading plan for tomorrow. If you like it, hit the like button and subscribe if you're not done it, and then share to maximum people. We need more subscriptions. Happy learning and happy trading. Thank you for watching.